I bet you didn't know these secrets wealthy people use to grow their money. In this video, we reveal 4 powerful strategies to grow and protect your money long-term. These aren't get-rich-quick schemes. They're proven steps to financial freedom. Don't miss out. Remember to like and subscribe for more Money Smart Basics videos. If you have any suggestions for financial literacy topics, please leave a comment. Stay until the end to receive a bonus tip. Welcome back to the channel. Today, we're diving into the 4 long-term strategies that people who build wealth focus on. Real, sustainable wealth isn't built overnight, it's built brick by brick, decision by decision. In this video, I'm going to break down exactly what those foundational strategies are. These are accessible principles that anyone can start implementing today. Forget the fads and the get-rich-quick schemes. We're focusing on what actually works for creating generational wealth and true financial freedom. So, grab a coffee, maybe even a notepad, because I'm going to lay out the roadmap that can genuinely transform your financial life. We'll cover everything from leveraging the markets to creating your own income streams. Let's get straight into it. Alright, let's kick things off with the first cornerstone of long-term wealth building: investing in the stock market. This is not just about buying and selling stocks, it's about understanding the market's dynamics and leveraging them to your advantage. The beauty of the stock market, when approached correctly, is its incredible power for wealth generation over time. It's a tool that, if used wisely, can help you achieve financial independence. Think about it. When you buy a stock, you're buying a tiny piece of a company. This means you are essentially becoming a part owner of that business. As that company grows, the value of your share should ideally also increase. This growth can come from the company expanding its operations, increasing its profits, or even through strategic acquisitions. It's about participating in the growth of the broader economy and successful businesses. By investing in a variety of companies, you are betting on the overall economic progress. One of the most critical concepts here is consistency. Regular, disciplined investing can smooth out the highs and lows of the market. It's not about timing the market, it's about time in the market. The longer you stay invested, the more you can benefit from the market's overall upward trajectory. Consistently investing a set amount of money, regardless of market conditions, a strategy known as dollar cost averaging, is far more effective for most people. This approach reduces the impact of volatility and lowers the average cost of your investments over time. And then, there's the magic of compound interest. This is where your money starts to work for you, earning returns on both your initial investment and the accumulated returns. Compound interest is essentially earning returns on your initial investment and then earning returns on those returns. Over time, this can lead to exponential growth of your wealth. For most people starting out, low-cost index funds, or ETFs, are fantastic options. These funds offer a simple way to invest in a broad range of stocks, without having to pick individual winners. These funds hold a wide variety of stocks, often tracking a major market index like the S&P 500. This means your investment is spread across many companies, reducing the risk associated with any single stock. This gives you instant diversification, which helps to mitigate risk. Diversification is a key principle in investing, as it protects your portfolio from the poor performance of any single investment. The key is to start as early as possible, even if it's with small amounts. The earlier you start, the more time your investments have to grow. Another crucial aspect is reinvesting your dividends. Dividends are payments made by a company to its shareholders, and reinvesting them can significantly boost your returns over time. Instead of taking that cash, automatically reinvesting it to buy more shares fuels the compounding engine even further. This reinvestment can lead to a substantial increase in your portfolio's value over the long term. The stock market will have downturns. These periods of decline are inevitable and can be unsettling. During these times, panic is your worst enemy. Emotional discipline is paramount. Staying calm and sticking to your long-term investment strategy is crucial for weathering market volatility. Moving on to our second powerful strategy for long-term wealth creation: real estate investment. Real estate is a classic for a reason. It's tangible and offers multiple avenues for wealth building. One of the primary attractions of real estate is the potential for passive income through rental properties. Beyond cash flow, there's the power of appreciation. Historically, real estate values have tended to increase over the long term. Then there's leverage, which is a really powerful concept in real estate. You can buy a property with a down payment, and the bank finances the rest. Real estate also offers some pretty attractive tax benefits. Landlords can deduct many expenses associated with owning and managing a rental property. There are various ways to get into real estate investing, from single-family homes to commercial properties. House hacking has become incredibly popular. This involves buying a multi-unit property, living in one unit, and renting out the others. The long-term hold strategy is often the most effective in real estate. Real estate can also act as a hedge against inflation. Now let's talk about the third strategy, which holds the highest potential for massive wealth creation: building a business. This approach is not just about making money, it's about creating something that can grow and evolve over time, providing you with both financial and personal rewards. The incredible thing about building a business is the level of control you have. You get to make the decisions, set the direction, and determine the pace at which your business grows. This autonomy is empowering and allows you to align your business with your personal values and vision. One of the key advantages of a business is its potential for scalability. Unlike a regular job where your income is often capped, a business can grow exponentially. As your customer base expands and your operations become more efficient, your revenue can increase significantly. A successful business is more than just an income stream, it's an asset. This means it has intrinsic value that can appreciate over time. You can sell it, pass it on to your children, or even use it as collateral for other investments. The possibilities are vast. At its core, business is about solving problems or fulfilling needs. When you identify a gap in the market and provide a solution, you create value. This value is what drives your business forward and attracts customers. There are countless types of businesses you can start, catering to every imaginable skill set and interest. Whether you're passionate about technology, arts, retail, or services, there's a business model that can align with your strengths and passions. Now let's be real. Building a business is hard work. It requires dedication, resilience, and a willingness to face challenges head-on. There will be long hours, tough decisions, and moments of doubt, but these are the experiences that build character and lead to growth. A solid business plan is crucial, even if it's a simple one to start. This plan serves as your roadmap, guiding you through the initial stages and helping you stay focused on your goals. It outlines your vision, target market, financial projections, and strategies for growth. Reinvesting profits back into the business, especially in the growth phase, is a common strategy for successful entrepreneurs. This reinvestment can fund new product development, marketing campaigns, or expansion into new markets, all of which can drive further growth. Building a strong brand and a loyal customer base is paramount. Your brand is your business's identity, and it should resonate with your target audience. Loyal customers not only provide repeat business, but also become advocates for your brand, helping you attract new customers. While the risk in starting a business can be higher than investing in a diversified index fund, the potential returns are also exponentially higher. The key is to manage these risks through careful planning, continuous learning, and adaptability. There's also an immense sense of satisfaction that comes from creating something from scratch. Seeing your ideas come to life, watching your business grow, and knowing that you've built something valuable is incredibly rewarding. Ultimately, building a business can be the ultimate wealth accelerator. It offers the potential for financial freedom, personal fulfillment, and the ability to make a positive impact on your community and beyond. If you have an entrepreneurial spirit and are willing to put in the effort, this path offers an unparalleled opportunity to shape your financial future. The journey may be challenging, but the rewards can be life-changing. Our fourth and final strategy, and arguably the one that underpins success in all the others, is a commitment to continuous learning and self-improvement. This is not just a one-time effort, but a lifelong journey that requires dedication and persistence. The wealthiest and most successful individuals are almost always lifelong learners. They understand that the world is constantly changing, and to stay ahead, they must keep evolving too. Investing in yourself, in your education, and in your personal development is often cited as the investment with the highest possible return. This investment can take many forms, from formal education to self-study and beyond. Continuous learning can take many forms: reading books, taking online courses, attending industry conferences, listening to informative podcasts, or finding mentors. Each of these methods offers unique benefits and can help you grow in different ways. Developing high-income skills is particularly crucial. These are skills that are in high demand and can significantly increase your earning potential. Examples include coding, digital marketing, and financial analysis. Networking and learning from others is an invaluable part of self-improvement. By connecting with like-minded individuals, you can gain new insights, share experiences, and find opportunities for collaboration. Staying informed about financial news, economic trends, and changes in your industry is vital. This knowledge allows you to make informed decisions and stay ahead of the curve. Understanding the latest developments in your field can give you a competitive edge. It can help you identify new opportunities and avoid potential pitfalls. The ability to adapt to economic shifts is a hallmark of those who build and maintain wealth. Flexibility and adaptability are key traits that can help you navigate the ever-changing landscape of the business world. Consider the compound effect of knowledge. Just as compound interest makes your money grow exponentially, the consistent acquisition of knowledge and skills makes you more capable and effective over time. The more you learn, the more you can achieve. Each new piece of knowledge builds on the last, creating a powerful foundation for future success. The consistent acquisition of knowledge and skills makes you more capable and effective over time. This ongoing process of learning and growth is what sets successful individuals apart from the rest. This commitment to learning directly supports the other three strategies we've discussed. It enhances your ability to manage your finances, make informed decisions, and seize new opportunities. Adopting a growth mindset as opposed to a fixed mindset is fundamental here. A growth mindset embraces challenges and sees them as opportunities to learn and improve. Being proactive about your education is key. Don't wait for opportunities to come to you. Seek them out and take charge of your own learning journey. Think about the cost of learning, the cost of ignorance. The price of not knowing can be far greater than the effort required to learn. And finally, it's not just about acquiring knowledge, it's about applying what you learn. Knowledge without action is meaningless. Use what you learn to make a positive impact on your life and the lives of others. So there you have it, the 4 long-term strategies that are consistently used by those who successfully build lasting wealth investing in the stock market, leveraging real estate, building a business, and committing to continuous learning and self-improvement. None of these are quick fixes, and they all require discipline, patience, and a long-term perspective. But the incredible thing is that they are all within your reach, starting today. Remember, building wealth is a marathon, not a sprint. It's about making consistent, informed choices over time. Don't get discouraged if you don't see massive results immediately. The key is to start, stay consistent, and keep learning and adapting along the way. Thanks for watching. If you found this video helpful, make sure to hit the like button and subscribe for more tips on building wealth and securing your financial future. See you in the next video. Congratulations, you made it to the end of the video. With that, you are ahead of 90% of most people in America. Here is the bonus tip that we promised. Stop chasing quick riches. Start building daily habits for financial success. Wealth isn't built overnight, but it is built daily. Stay disciplined, keep learning, and let time and consistency do the heavy lifting for your financial future. Remember, small steps today lead to big gains tomorrow. The information in this video is for educational and entertainment purposes only, and is not intended as financial advice. We are not financial advisors, and the content should not be construed as professional financial advice. Always seek the advice of a qualified financial advisor or other professional regarding your specific financial situation. The use of any information provided in this video is solely at your own risk. Please remember to like, subscribe, and comment for more Money Smart Basics videos.